Today is Monday, April 17th, and this is the ADM Investor Services Monday Market Kickoff. Please note that the views and opinions expressed here today are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or Archer Daniels Midland Company. Today's guests are Steve Freed, Vice President of Grain Research at ADMIS, and Alan Bush, the Senior Financial Economist. Steve, why don't we start with the grain markets this morning? Funds are now near record short corn and wheat and are also short soybeans and soy oil. Can they hold this position throughout the summer?
You know, they can because, 9 times out of 10 we have normal weather. It's just that no one really thinks that, especially in corn, that they will hold this big of a position. There might be some kind of weather rally, but the last USDA report was bearish, and so there's really no reason for them to cover yet.
And it's wet across the Midwest. The forecast is for more rain both this week and next. Are farmers nervous about late planted corn? Is the market concerned with this at all yet?
Well, I think farmers are concerned, especially the big ones. They have a lot of work to do in looking at all the different farm TV stations over the weekend and yesterday. Everybody, analysts said the same thing. Farmers can plant as much as 30% of the crop in 1 week, and so they shouldn't be worried, and obviously the market is not worried about it yet. But small farmers probably not too concerned, but we are going to be planting the crop late. Tonight the numbers should show about 6% of the crop planted versus 9 average, and then as the weeks progress we'll fall further behind. So I think we'll give it another week, but if we walk in Monday and the forecast is wet for another 2 weeks, then I think the market will react.
There is some talk that the 2017-18 U.S. corn and wheat carryout could drop from this year, and the U.S. soybean carryout could actually increase. Does this matter?
I think it definitely does matter down the road. It's just that there's so much corn and wheat in the world right now. We have record stocks that we're eating off of that until we know what our weather's all about. And for soybeans, people are still scratching their head why prices are so high with record stocks and the farmers adding more acres.
So Steve, what are the key support and resistance levels in corn, beans, and wheat right now, July contract?
We're trading July beans right now at $9.68, so $9.50 is support, just like $10 is resistance. And I think it's up to the Chinese to decide where prices go. They've been slow buyers to this point. They're uncovered for May, and so if they come in and get some coverage, we could bounce a little bit higher. If they don't, we could fall. The July corn's at 376, and we've been in a pretty tight range between 360 and 390. You get below 360 and the pipeline gets too thin for the record demand. If you get above 390, the farmer's going to sell you a lot. And in the wheat, we're at 440, and we've been also in a tight range between 430 and 450. And I don't think we break out of that quite yet until we know more about the global northern hemisphere weather this year. There are a few people that are a little bit concerned about some dryness in southern Europe, western Russia, and northern Africa. So we have to kind of watch that.
Alan, new historical highs were made in stock index futures in early March. Since then, however, prices have fallen. Is this the beginning of a new bear market?
Well, absolutely not. What we're seeing is pressure in the indices due to the geopolitical events, of course, with Syria and North Korea. So those uncertainties are really behind the pressure that we are seeing. Also, we have had some of the economic reports coming in maybe just a little bit on the weak side. Of course, there's some psychological damage done with Trump's agenda as far as his tax policies, apparently delayed a bit. But the dominant influence, the low interest rate situation here in the U.S. and globally is very supportive. Also, we do have a seasonal that comes into play that quite often after tax day on the 15th, in this case the 18th, there is a 2-week bump in the indices. So for a variety of reasons, we anticipate that there will be recovery in the indices, including new historical highs, possibly within the next couple of months, maybe 3 months, but this is not the beginning of any new bear market for stock indices.
Let's talk about the dollar a bit. Last year, the U.S. dollar soared to 14-year highs. Why has the greenback underperformed so much this year to date?
Well, the main reason was apparently the Trump administration is not that interested in a strong dollar policy, and this, for the most part, reverses a 2 decades old policy of a strong dollar policy. So that apparently has been reversed. Now on the This is the second time that Trump indicated that he is not in favor of a dollar getting too strong, or in fact he said that there are risks with the dollar becoming showing too much of an increase. So there is a policy change apparently. Also, it looks like the Fed is only going to raise rates maybe one more time, possibly two more times, but not the 3 times or 4 times that some banks had predicted. So we feel that the dollar index has topped, and interest rate differential conditions are no longer favorable to being long the dollar index.
Gold futures advanced to a 5-month high today. How can gold futures remain firm in spite of the expectation of the Fed increasing rates 1 to 2 more times in 2017?
Well, we have the geopolitical events that are ongoing. That is a dominant influence right now. But inflation, we feel, globally is going to pick up, and we're already seeing that taking place overall. So any break that we might see in the gold, $10 to $15, should be viewed as a buying opportunity. And I think that we will this week take out the 1,300 resistance in gold futures. And this is just the beginning of a bull market that will last for many months, probably years. So any break should be used as a buying opportunity for the gold.
Let me ask both of you. There's increased tension between the U.S. and North Korea right now. News of Russian, Chinese, and U.S. ships in the region. Should we expect some market ramifications regarding this increase in tensions?
Well, the geopolitical risks definitely causing market impact. Stock indices coming under some pressure, which we think is temporary. Gold advancing, which is being supported by this, which we think is just an additional bullish factor. And the dollar index not responding well to geopolitical events as they should have. So that's kind of a sign of weakness for the dollar not to respond.
Stephen, any increase in problems with the Chinese, or maybe the U.S. doing something in North Korea that might not be agreed upon or might ruffle the feathers of the Chinese, how would that affect grain trade?
Well, I'm sure that this topic was discussed in the recent visit with the President of China and with the President of the United States. And I think that most people came out of that meeting saying it was a good meeting. And so while maybe China has talked to North Korea about some kind of de-escalation of tension, I think North Korea is standing maybe by themselves in this. And so I think that from a trade standpoint, it looked like the U.S. and China came to some kind of agreement to not go into some kind of trade problem or trade war, which is probably beneficial to the grain markets. And I think in talking to a lot of families yesterday at their festivities, that was one of the top discussion and top topics of whether or not the U.S. is going to strike North Korea or not. So I think that tensions are at a very high level, and it sounded like the peaceful negotiations of the past is no longer on the table, at least with this administration.
Certainly a turn for the Chinese and maybe taking more of an arm's length position on what's going on with North Korea.
You know, I think the last thing that region needs is, some kind of attack. You would like to find out that somebody, especially the North Koreans, take a step back, but that probably is not an option. So we'll just kind of have to see, number one, what happens in the next few weeks, and then what kind of market reaction there will be.
Okay, remember, the views and opinions expressed today on this video are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or Archer Daniels Midland Company. If you'd like more information about our brokerage services, would like to speak to one of our experts about managing your risks, or would like to open a trading account, please visit www.admis.com.